Well, good evening, and a fantastically warm welcome to you all here this evening on the Open Door Show from Property CEO. Now, of course, those will know that my name is Richie Clapson, and I'm here this week with the other half of Property CEO, Mr. Ian Child, and he has not been on the Open Door Show since March, the end of March. So, Ian, do you want to say good evening?
Good evening for those that remember me. Not that anybody's making a big thing about the fact that I haven't been on since March, but it's great to be back, can I just say.
Did anyone miss Ian? Give me a wave if you missed Ian. No hands up. Okay, we'll carry on with that. Look, it's great to have you here. As always, over the next 45 minutes, there are a couple of hands going up. I must confess, I can see out the corner of my eye. Over the next 45 minutes, as always, we're going to take a deep dive into the world of small-scale property development. And I can say this week, isn't that right, Ian?
It certainly is, Richie. We're going to be covering some of the latest news items. We'll also, as ever, be talking to some of the movers and shakers in the world of property, who can give us, hopefully, a little bit of an inside track as to what's going on. Also, going to be shining a spotlight on any areas we think could be an opportunity for new developers in particular to take a look at.
Absolutely. And above all, even I say this with Ian here this evening, even with Ian, we're going to have a bit of fun doing it, because as we always say, life is too short not to. So please join in. Please join in. You can put any comments in the chat box, even if they're a little bit rude or a bit saucy. We might even read them out. And of course, please put questions in the chat box. It is a question and answer show. Ian, what are we up to this evening?
Well, we're joined this evening by Peter Vandervennin, who's the director of the Mortgage Consultancy. So he's a finance expert with about 400 years of personal experience in the industry, so almost as much as Richie. So, and Peter's going to be talking us through, well, the current state of the market, but I think we will also be tasking him to tell us, to gaze into his crystal ball and see what the rest of 2022 might have in store for us on the financial side. So looking forward to that.
400 years old. I think he's got a few more than that. But he's not on. I don't think he can hear us at the moment. He might not even come on. Maybe he is listening. Who knows? Anyway, just a quick shout out. Please give us a wave. Give us a hands up if you can see and hear us. Give us a wave. Give us a wave. Yes, waves are coming in. That's good. Didn't think there was any waves for the minute. That's good. You can put your hands down now. Thank you very much. Who is on? Rory's on. Good evening, Rory. Russell's on. Sue's on. Roma's on. Ryan's on. Rob's on. Peter's on. Jamie's on. Adam's on. Harjinder's on. Monifa's on. They're all on. They're all on. Every man and his dog and every lady and his dog are all on this evening, which is good. And good evening, Jen, says Dan. Jenny says, yes, hello, Jenny. Jenny says hello. Why is that? What's going on there? Why are you saying that? What's the point? Not sure. Oh, that's Jen. That's Jen's on this afternoon. She says, yes, hello, Jenny. That's a question. It says Jenny. I'm not sure what that means. You're just trying to confuse me. Rory says hello from moist Winchester. I assume it means it's raining. Never mind, Dave. And Harjinder says, great to have you back here. We have missed you. I don't know if he's speaking for a whole family at his end or basically the population as a whole that they have missed you. Harjinder, that's very warm words. Monifa says, we haven't missed you at all, Ian. It's disappointing you're here. Much preferred the show without Richie. Okay, I made that one up. God. Ian, we have missed this next section. I refused to step into your shoes and do the news. I didn't want to. I missed you as well, just a little, okay? And I didn't want to step in your shoes and make it feel like you just didn't have any value. And equally, it was a bit of research I didn't want to do. Ian, do you want to give us the news?
I can give you the news, but in fact, we've got about 3 months worth. So for the next half an hour, I'll be talking about.
We've got to get Peter on. Hurry up, Ian. Hurry up.
I've got 3 things to tell you. Well, you probably heard already that there was the rental reform white paper came out. Which was I think it was last week. That definitely sort of put the cat amongst the pigeons in some quarters, particularly in the buy-to-let sector. So some major changes to the rental industry, kind of spearheaded from by Michael Gove. A few of the standout items: Section 21 evictions, which is where landlords effectively choose to terminate their tenancies, are going to be outlawed. So that's going to give more protection to tenants. There's going to be a blanket ban on renting to families with children or those that are on benefits, so you can't pick and choose the tenants that you're looking for. And pets are going to be sort of falling into the same category. So tenants will have the right to request a pet in their house. So lots of things in the offing. I think it's a white paper, so there is good, bad, indifferent, and there will be lots of things coming out in the mix. Hopefully they'll knock the rough edges off a lot of it. Good news for tenants and addressing some parts of the the problem in that industry, but equally some challenges for landlords. Hopefully there will be a middle line that for people to tread. The second story I've got is, well, to be honest, this sounds like it's the same story every month, which is the latest house price index. So new figures from the Office of National Statistics released yesterday revealed that property inflation increased 12.4% in the year to April, up from 9.8% growth in March. So just when you've heard all the doom and gloom about the cost of living, about this, that, and the other, ultimately residential property prices in England increased 11.9% over the year. And London, though, continues to be the region with the lowest annual growth at 7.9%. And somebody says here, demand, from it's an estate agent, demand is still vastly outpacing supply of available homes. And as long as this market imbalance continues, prices will remain high. So yeah, as usual, house prices looking strong. How long will that continue? Don't know. And then the final one here, which I thought I'd offer a crumb of comfort for those of you that thought that planning permission was difficult to get, because there is what's this here? This is in the Daily Mail. A local council has been mocked for a bonkers decision to reject its own request for planning permission to put solar panels on its Grade 2 listed concrete headquarters. So yeah, interesting. The Medway Council have got a well, pretty much wholly unattractive yet bizarrely Grade 2 listed building built in the 1970s. They wanted to put panels on the roof, and they've not been allowed it. Somebody commented, did Medway Council not undertake a pre-application consultation with Medway Council prior to making the formal application to Medway Council? Another one said, need to be careful here. If the decision isn't sound, the council could appeal against the council, and worst case, the council could be awarded costs from the council. So it's not just the world at large that's having problems with getting planning permission through. It is the council as well. There we go. That's the news.
I'm glad you did that shuffle of paper at the end, because Chen says in the chat box, please, Ian, shuffle your papers at the end of the news. There we go. Chen, hopefully that's good. Great stuff, Ian. Thank you for that. Let's get our guest on. This evening we've got, as Ian said, Peter Vandervennin on from the Mortgage Consultancy. I've had the pleasure to be at a number of events with Peter, spoken on the same stage with him, listen to him talk, listen to him respond to people's questions and requests. He's just a really practical guy, and I like that sometimes. You know, he just talks sense. He knows what he's talking about. He has been in the industry a long time. I'll let Peter tell you himself how long he's been around. But I just like his practical approach, a real can-do attitude, someone that I feel you can deal with. And so it was a great pleasure for Peter to actually say yes, he would come on the show. You know, we asked him and he was very kindly come on the show. So it's good that we've got him here this evening. Obviously, Ian insulted him by saying 400 years, but let me just see if he's available. Peter, hopefully you're there. Peter, are you there in the background?
Yes, I'm, Richie.
Peter, if you can pop your camera on for me, please, that would be much appreciated. Let's see if we can pop his camera on. Peter,
hi guys.
To you. How are you?
Good evening, everyone.
Good stuff. 400 years, that's a bit harsh, wasn't it?
It was, yeah. I can't promise to make any cracks like you guys do. I'm sort of not that slick.
Oh, you're not. Hey, I've heard you on stage. I'm sure you are. Quick hands up if you can hear and see Peter. I mean, obviously you don't necessarily need to see him, but as long as you can hear him, I mean, obviously it's an advantage if you don't see him. Yes, they can. They can all hear and see you, Peter. That's terrific.
Good.
Peter, warm welcome. Whereabouts are you today in the world?
In Bexley Heath, South East London, North West Kent.
Good stuff. There he is. That's where he is. And what's the weather doing? Because it's moist in Winchester.
Oh, it's very nice and bright, nice and sunny here, mate.
Yeah, he could be making that up. Anyone else in Bexley Heath area, please let us know what the weather is, just to see whether Peter is telling the truth or not. Peter, can you introduce yourself? Introduce your mortgage consultancy. I know you've been in the industry, in lots of parts of the industry, a long time, which is why you've got this huge wealth of experience behind you. Please perhaps introduce yourself, your company, and what you do, and then we'll perhaps talk to you about where you think the market's going in 2022 for developers. But introduce yourself, Peter.
Okay, thanks very much, guys. Yeah, man and boy, as I say, 40 years in the industry in October. The first 20 years with Prudential, I was a Prudential agent, and then an IFA plus mortgage broker, and then we went out just mortgage broking basically that time. So lots of experience, as you can see, no hair and lots of grey hair. So hopefully that leads to the experience.
You might colour it grey. We
lot.
don't know, but you could be quite young and just colour your hair grey and shave it off.
Sort of built my name up as of getting some complicated deals across the line on the buy-to-let front, and it grew from there. So we have landlords, developers that have got starting out with their first property or first development, right through to our largest client's got sort of 400 plus sort of properties and so on, which we manage for him. Well, not manage, it manages mortgages for him and so on. So yeah, it's and as we've grown, I've got 10 employees. As we've grown, it's quite nice because we get to talk. You know, I've had some phone calls from heads of lending of some major organisations today, telling me what is going to happen and what's not going to happen, and some predictions as well. So some hot off the press news as well as we go on.
Brilliant,
Cool.
brilliant.
Wow.
That's great. Peter, look, I mean,
So,
it's always interesting when we've got someone with many, many years experience. People want to know your opinion. You know, obviously, by the sounds of it, you've got some stuff hot off the press as well. Do you want to give us a bit of an overview, a bit of prediction of what you think's happening in the property market for 2022?
Sure. Okay. I think the first thing there are going to be a few negatives around. So let's start with a positive. A couple of positives of predictions. Certainly, the sector that you operate in, Richie, I don't see any shortage of cash in any way, shape or form. That sector is awash with money, and if anything, there's more money pouring out, and particularly since the pandemic, a lot more of private money I've seen come into that sector. So I don't see any liquidity problems in that sector whatsoever. And even in my sector, the sort of buy-to-let residential mortgage, there's no liquidity problems. There's just the volatility problems, and so that is absolutely carnage at the moment with rates. So if you haven't looked at rates recently, please sit down when you do, because you'll be quite shocked at what the rates are. And the main thing is we've got a bit like inflation. We've got into a bit of a spiral. Lenders are buying in money at higher rates. They put the rates out there. They lend it. And the other lenders then follow and put their rates up, and then they run out of money and they have to buy in higher money, and we're in this spiral of higher rates. My prediction will be it's short-lived in the space of 6 to 8 months. I think it's going to be like this into the first quarter of next year. Obviously, we've got some more base rate rises. A lot of the cases, longer-term fixed rates sometimes are actually cheaper than the short-term fixed rates. I think the other positive is the longer-term fixed rates are where we expected them to be. You know, at the end of last year and the beginning of this year we were looking at a gradual increase in base. Base might go back in the first quarter next year if inflation can be curbed. But the lenders are also inundated business. As you know, there's been a lot of business. We've done as much business in the last 2 months as we did in half of last year. So it's immense. We've already done last year's business at the end of this month. So lenders are like that. So they're actually putting rates up. Some of them have come out of the market just because they've got too much business. Now, the developer sector obviously is a more niche area, so there's plenty of money in that area. However, what we have seen is just a slight hardening. So you might need to think of slightly more deposit, maybe another 5%. You may have to work a bit harder, particularly for those first-time developers. So when the market starts to change, then they just want that little bit more security or comfort feel about your professionalism. But obviously, if you have people like Ian and Richie behind you, they'll know how to professionally present it to a lender. And obviously, they've got some lenders on board they work with as well. So, but it's going to probably just be that little bit more difficult. My prediction for the property market as such, very much as Ian was saying here, I don't actually see a drop in prices. I see at the moment where there's been 10, 15 people for the same property. I think that's going to come down to 1 or 2, 3. People only get asking prices or maybe slightly below, and the media are hyped this up as, oh, there's a drop in the market. Do I see a 2008? No, I don't see a 20% drop in market. Well, where I am in the southeast, that's what happened. mainly because of demand. We've had probably 5 or 6 years of pent-up demand. Also, we've got the census coming up, so, shortly, and I'm sure the population will be way past where they actually think it's going to be. All those people have got to live somewhere. They've got to live, as I say to my first-time investors, there's 3 things a human being needs, which is water, food, and a roof over their head. We're about to invest in one of those, and if you invest in that, you can't really go wrong. But unless you go gung ho, but if you take the right education, listen to people with more experience, then it's a fail safe not to not make money, if you understand what I mean. So yeah, that's where I see things going at the moment. So I don't see any liquidity issues in either market, but in the buy-to-let resi market, then rates will go up. I guess obviously the developers will probably jump on that bandwagon. I expect them to probably profiteer a little bit, push their rates up, and they'll say it's because a bit more risk, the market's not so certain and so on. But that's market forces for you.
Interesting. I remember. I mean, Peter, I'm obviously I'm not nowhere near as old as you, clearly. But
of course you are, Ross.
Good. I don't have any grey hair. I mean, I don't have much hair to go grey, to be fair. But I remember when we bought our first property, my wife and I. I mean, it went up to 16.5%. For that, it was pretty tough times. Peter, that's brilliant. Thanks for that introduction. I'm sure all of you out there have found that sort of introduction interesting. I'm sure you've got some questions. In fact, I know you've got some questions because there's some already coming in the chat box. Peter, are you ready to field a few questions?
Oh, absolutely, Richie. Absolutely.
Ian, have we got a really difficult one to start with that we could perhaps throw at Peter just to see how he is?
We wouldn't do that, would we? We wouldn't do that. I've got an easy one from Sadie.
Easy question to start with, Peter. Go for it, Ian.
Okay.
So this one's from Sadie. Good evening, Sadie. And she asks, and I think you might have sort of touched on this really in what you just said, but for clarity, she said, good evening. Good evening. I have heard that at the moment, lending is really difficult to get. What is your view on this?
Yeah, I think I have sort of covered that. I think lending is not any more difficult than it was 6 or 8 months, or I don't think it's going to get any more any more difficult. Apologies, but it's just you're going to have to pay more for it. That's the issue. The downside we've got on the buy-to-let market is the more specialist lenders. If we were struggling with a stress test, let's say for a London property, we'd go to one of the Precises and so on, where they do use a pay rate. The problem is that pay rate has now gone up, so it's more expensive. So we're struggling, to get the rent. So with buy-to-lets, yes, you might have to leave more money in or put more money in to buy them as rates rise. So, however, as I always say, property's secular, and in any cycle, with the right strategy, you can make money out of property.
Fantastic. Thank you very much, Sadie. Hope that answers your question. Richie, what's next?
Yeah, Peter, we've got a question from Chen, regular listener of ours, and they say, what are your views on the availability of money for new developers? And I know we talked about availability of money, and you say the development sector is awash with money at the moment. But what about for new developers? Someone brand new to development, maybe with a buy-to-let background, getting money. What's the sort of availability there?
I think if you've got a buy-to-let background, that's a big tick in the box. And we're not collaborating in any way, but ultimately, as long as you've got professional people, it's all about how you present yourself. You need experience behind you. You need project managers. If you're hands off, lenders will lend off to you if you've got the right people behind you with the credentials. So it's about a professional approach, making sure your spreadsheets work, the numbers work. Don't be off the scale with predictions of values if you can't back them up with lots and lots of evidence. The main thing I think will be a warning for most developers is, and one of the things I get involved with, I may have not done the development finance, but we get involved a lot of getting people, out the doo-doos at the end of it, where they come to me and word of mouth, they go, well, this guy might be able to sort you out. You've got to make sure that you've got multiple exit routes. Even if your first choice is to sell, you've got to understand the market can turn at any time. And yes, I've been through, I think it's 6 market cycles that were very, very sticky, and legislation changes and all those things that Richie will tell you I've had developers that have lost their contingency fund in the ground, even when they've had ground surveys and things like this. I can give you another story of a developer who knew that there would always be a drag with getting the utilities in. So he booked them in 6-8 months before he needed them. And then that supplier then went and changed contractors, and they went, no, we can't do it for about 10-12 months. And he sat there with a finished development. Lucky enough, he's quite wealthy, so he didn't need any finance. But these are the things that you can't predict, but you must try and factor in. So your contingency funds and things like that are very, very important.
Yeah, interesting. And I think it's absolutely back up what Peter said there in terms of having that team around you. You know, if those that are I'll give us a wave actually. Who's brand new to us this evening? Who's brand new on the show? Let's see if we've got a good selection of people that are brand new. Yeah, there's a few people brand new. Obviously, a lot of you are regulars, but a few people brand new. And I think, you know, in terms of what we teach people, it's about being the CEO, hence the name of the company, propertyCEO, and running as a team of professionals. Don't be the project manager yourself. Excellent, Chen. Hopefully that's answered that question for you. Ian, let's have another one for Peter.
I've got one here from Petra. Good evening, Petra. Will I need to give personal guarantees for commercial money? And if so, how does that work if I don't have many assets? What do you make of that one, Peter?
Well, in most cases, yes, they're going to want a security. I mean, obviously, the first security will be the development. It would, you know, if the GDV stacks up and the loan to value on the GDV works up, then you may not need to be able to put any other, you know, asset up. But excuse me, generally, most people have some type of asset, but you can use a secondary charge on equity in your property, or in case certainly with development finance, if the parents have got an unencumbered property, they're happy to share it with you. That could get you over the line. The main thing with development finance is track record. Once you've got a track record with the lender that you've borrowed money, you've given it back on time, why wouldn't they want to lend to you next time round as well? It's more, back in the old days when I first started mortgage broking, it's more sort of relationship, you know what I mean? And in the old days, we'd walk up to C&G with a paper application, because it was all in branch in those days, and I'd say to Maureen, oh, Maureen, your hair looks lovely, Maureen, fantastic. How'd you do that? This one's just got a little bit of a quirk. Can you get that one through for me? So it's about relationships. That's all gone now on my side of things, on the mortgage side, because it's all, a lot of it is computer driven, of course.
You don't hang around with Maureen anymore?
No. She was old when I was a lot younger, so I'm not sure she's around anymore. If there was anything, I used to take a box of chocolates in to get a case through.
Yeah, I knew you were a bit of a smooth, aren't you, old silver fox?
Excellent. So I think also just to kind of add to that I think one of the other aspects of what lenders are most nervous of is actually developers giving up and trying to throw the keys back. So having a personal guarantee, having some form of collateral, basically it's the nuclear option for the commercial lender. It just means that they've got confidence that the developer is going to stick with the program, find a solution, because all commercial lenders know that there are bumps in the road in development. So they just want to make sure that basically the developer stays with the program. But Petra, I hope that answers your question. Richie.
Got a question that's literally just popped in. It says, hi Peter, great to see you on the show. Haven't seen you for some years. You may remember you used to bring me chocolates. Any chance we could meet up at some point? Maureen. Okay, we've got a serious question here from Adair, and I think this follows on from what we were talking about earlier. Adair says, if we have a development project that overruns and we need to extend our finance, our development finance, I think he's talking about there, the agreement term, is this likely to be a problem? I've heard it can be expensive. I think this has followed on from your point about, you were just talking about delays and it went on longer, but that guy had private money, the one with the services. What if then we've got a situation where we've got a developer, they've got development funding, they've got a problem, say, with services, and they've got to extend their financial term 5 or 6 months? What implications are there, Peter?
I think the main thing is would be just the same as somebody had a normal mortgage and couldn't pay it. It's about engaging with your lender. And if it looks, you're probably going to know, and particularly if they've got people like you in the background, Richie, they're going to know 6-8 weeks, 3 months beforehand that all the kitchens haven't been delivered, from Taiwan or wherever it is, or they know they're going to have an overrun. Talk to the lender first of all. That's the thing. Engage with the lender. If you engage with the lender, then I'm quite sure that they will be flexible towards the end. But if you just stick your head in the sand and end up and turn up on the last day and go, I can't pay you back, they're going to start, slapping some charges on you and so on. It is more expensive because the risk goes up. But I think you can, it's a bit like extending a mortgage offer, they don't want to call the money in. They don't want to finish the development off. Let me tell you, they really just want their money back. So it's about going to them with a solution and say, here's the evidence of why it's overrun, things beyond my control. This is what we're doing about it. What can you help me with so that I don't get my pants taken down, in effect?
Mm. Wouldn't want to see your pants taken down, especially if Maureen's popping around, would we? Anyway, look, just as an aside,
see how I'm feeding you now, mate.
I don't know, but it's just
completely superfluous. It's the new double act.
Hey, Peter, we could get on TV, I reckon, you and me. We'd be perfect. It'd be fine.
So.
Forget all this property lot. We could get a Saturday night slot. Peter, just as a thought on that, and just as a sort of continuation from me, so Adair, hopefully that's answered your question. One of the big problems for a lot of new developers when they go out and they talk to brokers, people like yourself, it's about understanding what they're signing. And sometimes new developers will sign an agreement where there are horrendous penalty clauses at the end. If someone comes to you, how would you, obviously there's only limits of what you can do in terms of advice, but how would you guide or steer them to make sure they're not signing up to something that there's no leniency at the end, and it's just literally the box says this, you're going to get screwed over? How would you guide people with that?
I think the first thing I would do is I'll go back to what I said earlier, and the first thing I do is, I'm very ethical. I want to get you off the finance. Now, it might be that you want to sell, but it might be that you want to refinance. I wouldn't be comfortable with you getting into finance if I didn't have at least a couple or three exit routes with different lenders in case one drops out of the market, that type of thing. But yes, it's also going, we will know who are amenable at the end of contracts to helping people get over the line rather than ripping them off and so on. But yeah, like in any contract, you should always read it. And if anything, you have to sometimes spend money to make money, get your solicitor to run it over and see what he thinks, take professional advice, listen to us guys, and just don't go gung-ho into it.
And I think really, I guess as you say, your intention is to get repeat business, and you are going to work with not only repeat clients like us as developers, but as repeat funders. You want to only work with those funders that are going to work with those developers.
Yes, it's particularly very much more relationship than more the sort of buy-to-let residential market.
Brilliant. Ian, what's next?
Got one here from Sally Ann. Good evening, Sally Ann. She says, great show tonight, guys, and good to see Ian back.
No, she doesn't. Where's that? You've made that up.
And Sally Ann, one of our favourite viewers, but she also adds, when is the best time to start speaking with a broker like Peter? When we have identified a potential project or before that? What do you think, Peter? When should people contact you?
I think at the end of the day, if you've got a team behind you, be running it past Richie or whoever he assesses his deals, that's the time to actually, way early, where we can give you some of the, flavour of where the market is lending wise, but also sort of sense check the project as well, from that perspective. But also it's the exit routes, as I keep coming back to. It's about exit routes because we know that things can go, belly up at any stage, and the market can change. So it's about having all of those things, the ducks in the row along those lines, and making sure that you can get out the deal before you get into it. But yeah, it's all about being professional. Make sure the earlier you can act on something, the more chance that you can get out. And what's the saying that failing to plan is planning to fail.
And I presume, Peter, that even before they've got a project on board, if they're just fresh out of the blocks, absolutely no harm in making contact with brokers like yourself to basically yeah, put them in the put you in the picture as a potential relationship there, and then maybe get a steer from you in terms of the sort of information that you'd be looking for their first project.
Yeah, and to be honest, I've run my eyes over stuff and just gone, people, that it doesn't work. Don't do it. I can think of cases where they've gone on to do it, and yeah, some have come out the other side, some have lost their shirt. But if I don't think the numbers are going to stack up, then the lender's not going to think. But you have to understand that there is technically always someone that'll lend if you've got the right credentials. But also there's some shady lending out there as well.
We'll avoid that. Brilliant. Thank you, Peter. Sally-Ann, I hope that answers your question. Richie.
Yeah, Hassan has asked a question here coming earlier. Considering the current economic conditions, do you think it is a good time to buy or sell property? Should you buy or should you sell at the moment? I guess that's just a general overview. What do you think? Which one? Which would you go for, Peter?
Well, I'll always go down the route. My richest clients are the people that have owned the most property for the longest period of time. So yeah, as my largest client says, property's not a get rich quick scheme, it's a get rich slowly scheme. So yeah, and if you try and push the boundaries and try and speed that up, that's when you fall over. So it's about like getting on a bike. At the end of the day, you have to fall off a couple of times. You'll buy a property or a small development where you end up not making maybe a bit of profit you wanted, but you learn by that, and the next stage you won't make those mistakes, and so on and so on and so on. But property, as far as I'm concerned, if you look at the curve over years, yes, there's been a few blips, but stay with the game. At the moment, obviously, there's quite a lot of acquisition costs that there wasn't around a few years ago. So the longer you can hold it, it dilutes the cost of acquiring the asset in the first place. But yeah, one of the hardest things I have, was at the property club last night. I talk at, which I might get you down to, Richie, at some stage. But
okay,
one of the hardest things is actually get to. Sorry,
there's more in there.
No, she wasn't. But one of the hardest things I have is sometimes there is a time to sell a property. Particularly with Section 24 taxation and so on going on at the moment. And I had a bad piece of news for a lot of people last night. But I will put this out there for anybody that's got a portfolio. If you've done a deed of trust for beneficial ownership, all trusts from later in the year, September, I think, have to be registered with the government. So I'm not sure the beneficial ownership trust will actually work because they can now see it. So that's just a word of warning. But yeah, it is a bit of a minefield out there. But yes, the longer you hold property, the more you will make. It's as simple as that. Yes, you can buy below market value. Yes, you can do this, but you can buy a vanilla property. As long as you hold it long enough, it will make money for you, as long as you're robust with your numbers to start with.
If I just add to that, in terms of development at the moment, the opportunities are there. There's a huge disruption in the marketplace. The availability of commercial buildings at good prices, with the availability of finance, because you've got permitted development rights to convert them. And when we look at the high street, the office sector market, it is ripe at the moment. That is a marketplace to buy in if you're looking for development. Ian, what's the next one?
Absolutely, Richie. Sorry, I was going to say, yeah, just because of the change of development rights in 2020, and the disruption to the economy from the pandemic, there's a huge change going on, and none of us really know how that changed, but change creates opportunity, as simple as that.
That does, absolutely. Well said. Well said. Ian.
I've got a question for you, actually, Peter. It was about providing solutions. So I think one of the things that you alluded to earlier, and certainly we know that you're creative in terms of being able to find solutions to people, particularly on the buy-to-let side, but generally, what are the common issues and problems that you encounter that you've been able to find solutions for in your business?
I think one of the things I would say is it depends. Let's say you're creating units. There's a process to follow. So let's say you're converting an office block into 6 units. So you're on one title. Okay, so it's about taking tax advice. If you want to hold those, then your best value down the line to get the best valuation, if you don't want to go down a commercial deal at the end of it and you want to go individual deals, would be to split the titles. But you need to be engaging your broker to start with to make sure you get to the right lenders, because the way valuers work on a unit like that would be, let's say you've got 6 flats in a block and you just want, we can do one deal across the lot, but the valuer will always probably discount the, you know, let's say that each flat's worth 100 grand, for instance. So you've got 600 grand, you think it's worth, it won't value at 600 grand. The valuer will come along and he'll say, yeah, it's worth 600 grand, but I'm going to discount it between 10 and 15%, because if we have to repossess you, we're not going to create leases. We're under the remit of, we have to treat customers fairly. This is all FCA rules, the regulator, and therefore we've got to sell that property quickly. Now, that property is only going to be interested to another investor, a very narrow market, okay? Whereas, split the titles, do 6 individual mortgages, you've then got 6 entities to be sold any time. So the lender goes, oh, we won't give any discount. So you need to maximise your LTV and your, you know, how it's done. And we can do that. What we have to do is you have to do it to mitigate tax in 2 limited companies. First of all, buy the property in the limited company. What we would do then, form a sub-limited company, move the freehold down into the sub-limited company and just create 6 leases staying in the company at the top. Then we finance each one individually, okay? So things like that is just to give you an example, but that's the type of thing we would look at the beginning. Do you see what I mean? That's right at the beginning when you said to me the previous question where you said, what am I going to, you know, what will we engage me then? And I can say to you, well, this is the process. So you're going to need to form 2 companies. You might as well do that now. Do you know, and get 2 bank accounts. Make sure that you're ready at the particular time, because you want to get off that finance as quick as possible.
I think that's a perfect example, Peter. It's one of those cases of you don't know what you don't know. So being able to engage with a professional up front in all of the disciplines, actually, but certainly on the finance side, can make a massive difference, because some of these things we can't undo down the line. So particularly when it comes to things like tax and so on. So fantastic. Thank you very much. That was a cheeky Ian question.
You got your own questions in.
Yeah.
We've got a question here. So this is always an interesting one, but it's one often we would answer on our show, gets directed to us. June emailed this in. And by the way, anyone, you can always email questions in the week. Can't promise everything's going to get answered, but if we can, we will do it. But June emailed this in the week. And she said, how do I get started in property? And how do I choose an effective education provider? And we could always answer that, Peter, but I don't know what whether she's talking about development, and obviously, where do you get started when you want to get yourself educated? She could be talking about buy-to-let or HMOs. Peter, you've been in the market long enough. You've seen the rise of educational providers out there. In your opinion, how would you choose? How do you determine, someone completely new, how do they determine who is a good educational provider?
I'm going to sit on the fence a little bit about this, but there's 2 camps. Networking by far is absolutely the first thing you need to do. You do not, in my opinion, need to spend thousands and thousands of pounds on education until you get to the more complicated stuff like you. And I'm not pushing you. That is a genuine answer. Development, you can lose your pants on, so you need the backup. But getting to buy-to-let, go along to some networking groups that aren't businesses as such. There's some great ones around. That's how I started many years ago. Kent Property Meet. It's run by a couple of landlords just for the benefit of other landlords. That's all. There's no money. There's no courses sold or anything. But there's, you know, hundreds of years of experience there, and everybody makes mistakes. It's impossible. It's human beings. We make mistakes. For a £25, £30 meeting fee, you can talk to those people. And property people love talking property all the time, I'm afraid. Yeah. So you can have that wealth of experience. Just keep going along. Get to know people. Get to know the people that are actually walking the walk rather than talking the talk. A lot of these, I feel, a lot of the educational things, they talk the talk. So yeah, I think that's the way I would go. Talk to those people. I'm not saying don't get education down the line, but by talking to those people, you'll know the ones that actually deliver, charge a reasonable price, and it's a fair deal as such in that sense. But that's the way I would go. Start with a non-business networking group that's solid, and you may need to go to 2 or 3 before you find the ones that fits you as such.
I like that answer, Peter. Thanks for honesty on that. That's terrific. I mean, June, it's great that you've answered that question tonight. I don't know if you asked it earlier in the week. I don't know if you knew Peter was on or not. We could have answered that. It's always a bit difficult answering when you're an educational provider, but I like that point that you said, is go to, you know, the networking groups that aren't businesses trying to sell you education behind it. I think that's perfect. I think that's perfect, because you'll get some real honest feedback of what people have done and what's good and what's bad, won't you?
Yes, absolutely.
Brilliant. Brilliant.
All I would say is it sounds like I'm sucking up to you, Richie, but development is a different area. There isn't many educational providers that provide development. Do you know what I mean? And I think you're filling a sector that's poorly served, that's ethical and robust.
Oh, we'll have to send them a tenner now, won't we, Ian?
Well, I'm going with the chocolates myself.
The chocolates, yeah. Let's have no more Maureen jokes.
Yeah, it looks lovely, Ian.
Ian, we've got a question in there from Jen. Do you want to pick that one up and let's make this the last question in there?
I can see several questions from Jen. Which one did you want me to ask?
Well, I want to go to the one that she says, hello, Richie, Ian and Peter, can you take the equity from your property to use for commercial property? So I've asked it. There you go. It's not complicated asking the questions, but I've done it. So can you take equity from your property, Peter?
Yes, I mean, sometimes you don't need to actually take the equity out. You know, if you've got the right underlying lender that will allow a second charge, you know, if you've got a chunk of equity and a great deal underneath, don't get rid of the deal and make it, you know, take out early redemption charges. A lot of development funders, it's always commercial finance and bridging. They're always happy to take a second charge. So a lot of lenders will go, the maths you need to do is go, well, okay, I've got 100 grand of equity in this property. I'll offer it up as a second charge. The underlying lender will allow that. If they will, we can tell you who and will and won't. And just factor in a safety margin. So, you know, if you've got 100 grand worth of equity, they'll probably take 70 grand of it as an extra security to sweeten the deal. It sometimes get that deal over the line, particularly if you're a first-time developer. They can even do it, although it becomes regulated, even if you've got shed loads in your main residence, some lenders will take that as well. Obviously, it's risk. You've got to understand it, but you're not taking money out. So you can do it. But again, that's the type of thing we would, when somebody's coming to me and saying, this is what I want to get into, we would look, if you haven't got any cash, then you're going to need some cash. But, you know, if you've got a shed load of equity and across two or three properties, we might only remortgage one and put the others up as a second security. Okay.
Brilliant. Jen, hopefully that's answered your question. Jen's a few questions in there. One of us is, Peter, will you give us your contact details? Perfect timing. Peter, if people want to get hold of you, Peter, what's the best way? We will put your details in the show notes, so don't worry if you haven't got a pen and paper now. If you have, grab one quickly. Peter, what's the best contact details for your business, the Mortgage Consultancy?
I guess, yeah, it is the mortgageconsultancy.co.uk. If you want my email, it's peter@themortgageconsultancy.co.uk. We are, how can I say, we're very, although I'm old, we're very forward thinking. We have a up-to-date, well, cutting edge CRM system. If you want to engage with me, we have pre-arranged appointments. If you want to do some business with me, literally I need your name as email address and mobile. We can give you a SIM. It's all encrypted. You can sit on your desktop like you are today, upload all the documents absolutely securely, and then we can transact. We don't even need to meet, and we'll do it either through our CRM system, Zoom or Teams or whatever you want to do. But that's the type of thing. I'm happy to give anybody half an hour for free to show them how we do work with no obligation. At the moment, we are a bit swamped, but I think things are going to settle down in the next 10 days or so.
So not tonight, folks. Message him tomorrow.
Yeah.
Yes.
Peter, look, thanks for coming on. We've enjoyed that, haven't we, Ian?
We certainly have. Thank you so much. And it's been amazing.
Peter, look, brilliant. It is brilliant. Everyone, a load of questions coming in. We haven't managed to answer them all. I do apologise. Peter, would you come back again at some point in the future?
Of course I would. Yeah, absolutely.
You have to say that now. He might email us later and say, forget it, I'm not going to, but we'll let you know in due course. Peter, if you could send your details through to our team, we'll put them in the show notes, your contact details, appropriate contact details, that'd be great. Everyone, the recording of tonight's show will be up on YouTube next week, so it'll be up on YouTube by Monday. Please jump onto there. Peter's contact details will be there. Peter, thank you very much. We'll let you go and enjoy the rest of your evening, and we'll catch up again soon. Peter, thank you very much.
Brilliant. Thank you, guys. All the best.
Wow, that was good, wasn't it?
That was very good. Educational.
Yeah, very well. Just a quick question. Jen asked another question. Richie and Ian, where is the best place to read or learn about PD rights? Ian, any announcements on any books or anything? Can you say anything there? Am I preempting something?
No, I have heard a whisper. Actually, there is a new book coming out next week, and it's something like The Guide to Small Scale Property Development. Written, a couple of chaps written it, put it together, and it's fresh out of the blocks next week. So on the 27th, I think. Although I think there may be a sneaky preview for some of our students and subscribers, but yeah, that's going out there, and hopefully the idea behind that book really is to give people an overview of what's involved in property development, how you get into it, how you get the money, how you find deals, how it all works basically. So gives people a bit of confidence and a bit of knowledge before they make a decision as to whether it's something they want to do. So that is a good place to, and of course we cover reasonably comprehensively all of the PD rights, permitted development rights that are out there, and we tell you which we think are the best ones. So yeah, look out for that coming very soon to Amazon.
There you go, Jen. So if you're on our list here, you might get an announcement. And Jen, if you can't wait till next week, and indeed anyone else out there, if you want to come and join myself and Ian completely free and understand a little bit more, we run a series of free webinars. We've got one, I think, coming up on Saturday, I think. If not, there's one on maybe Tuesday or Wednesday next week. Write this down, grab a pen and paper, write this down. I'll give you a link so you can come and join us completely for free. It's a half-day free session. We call it the six-figure roadmap. Just go on to propertyceo.co.uk/SFR for six-figure roadmap. So propertyceo.co.uk/SFR. Jen and anyone else, come and join us for 3 hours for completely free, and we will delve into permitted development rights there. Hopefully that's helped. Folks, it's pretty much the end of the show. As always, please pop in the chat box if you've enjoyed the show. Give us any comments. We put the show on for you. If indeed there's any other guests that you'd like for the show, please put those requests in the chat box so we know. Any good comments. If you're really pleased to have Ian back, pop that in there. If you don't want him back next week, let us know. Next week's show is Thursday, the 30th of June. Next Thursday, 7 o'clock. And we have our great friend Dan Stiles back, who is a project manager, quantity surveyor. So all of your project management questions there. Ian, have you enjoyed tonight's show? You've been away since March. How does it feel being back?
Well, I felt it was a bit rusty, but I think, yeah, back in the saddle. So great to be back. Looking forward to next week already.
I thought you'd done really well, Ian. I thought you'd done absolutely fantastic. I thought you just walked it, mate. You were brilliant. You were brilliant. Who says what about our show this evening? Let's have a look. Monica says, great. I was really pleased to have Ian back. Top show, says Russell. Thanks. First time today. Brilliant, gents. Brilliant. Thanks, gents, says Trent. Never rusty, Ian, says Jen. Oh, there we go. Creepy. Just because he said you could get a book. I don't know if he might even send you a free one now, Jen, because you never know. Thanks, chap, says John. Dan says, great show as always. Rory says, excellent. Harvey says, good to see you back. Jinder says, great show as always. Well, as always, thanks for attending. We do appreciate it. We love it. We'll see you next Thursday. Have a good weekend. Cheers now. Bye-bye.
Bye now.